Hey guys, Mike here. So we didn't quite get the bounce back we were hoping in the market today. I mean, the indexes end up obviously going red in the morning, fought back to green, kind of somewhat of a V-shaped recovery starting around 11, 12 o'clock or whatever. But, the good thing was you were waiting for two big stocks, right? Apple and Amazon to see if they're going to bring the market down or bring it up. You couldn't have both report negative earnings, that's for sure. So Amazon's up about 7 to 8% in after hours. They reported a really good quarter. Apple's was, I mean, it was okay. It's an Apple quarter, but they're down about 2% or whatever. We'll see where it opens up. But the stat that blew my mind, and tell me if this blows your mind, is that, think about this. Nike's market cap is 167 billion. Wells Fargo is 166 billion. Disney, 156 billion dollar market cap. UPS, 156 billion. Caterpillar, 145 billion. And Apple's cash on hand is 166.5 billion. I believe it's something like if you just turn their cash into like a market cap or whatever, not even a market cap, but like into a stock, it would be the 65th and largest stock in the whole world. Isn't that crazy? I mean, how many companies could they just outright buy with cash? I mean, it's nuts, which of course is one reason people keep buying Apple, right? But there was a few things we're going to talk about, especially when it comes to the stocks and everything. And one of them is, and I want you to make sure you understand this, that something we got to be aware of. Again, a lot of people put fear videos out about this. I'm not. I'm just making you aware of this, that the U.S. Treasury had increased borrowing estimate for the third quarter to just over $1 trillion. And they have to do this because the higher the interest payments goes and the longer these rates are going to stay higher, they'll have to keep increasing this. So that's 274 billion more than what was estimated. We'll see if the banks keep supporting this. That's why you have to pay attention to where the money's coming from, because money starts coming from these big hedge funds, things like that, starts coming out of the market, it'll go into the bonds, right? And so you got to just be aware of it. Don't be scared of it. Just be aware of it, okay? And the other thing is, these are some negative things, but, when you just look at the delinquency rates on credit card loans right now, to small lenders, mind you, this is small lenders, right, are now at all-time highs at 7.1%. This goes back into the 80s. And so should we be surprised? Absolutely not. And you can see in 2008, the peak was 6%, 3.8% in 2020, but because we obviously use a lot more credit cards and stuff now, and people taking loans out, that's why it's this way. But again, we'll see if we expect that to continue to go up, right? I mean, and then when you look at bankruptcies, this came out today. U.S. bankruptcy filings per year, you can see year to date through July, rest of the year. You can see right there, we're already over 2022, 2021, right up against 2020, which, by the way, when we shut down the world and people's companies went under. And if you go back before that, you got to go all the way back to 2010 to have this number really beat, right? And so just keep that in mind. We'll see what happens for the rest of the year. I mean, you got to think, we're definitely going to eclipse, obviously, 2022, 2021. I would think we're going to eclipse 2020 if the rates stay high like this, and easily beat 2011 through 2019. So let's see if we can challenge 2010 numbers. Again, in order to be on this list, you have to have like 10 million at least in liabilities and assets when you file the bankruptcy. So this does not count like, really, really small companies, mom and pop stores, family-owned businesses that don't have 10 million assets, things of that nature. So just keep that in mind. So of course this number will continue to go up because every time I report it, it goes up. And that's what happens when you keep rates high. You'll see companies going out of business. Now the big conglomerates absolutely love this. The Apples, the Microsoft, the Amazons especially love seeing these companies go bankrupt, just FYI. And guys, before we continue, if you're getting anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing, because it gives them more customers and less competition, right? Which is why another reason I hate our politicians, because they allow these big conglomerates who bribe them legally to let them say, we're not a monopoly, there's no such thing, right? Even if they own 75 or 90% of some sector, doesn't even matter, I guess. I don't even know what a monopoly is anymore, to be honest with you. It's definitely different from what I learned in business school. I can tell you that right now. Now, lead into, some of the stock market stuff, right? Some of these charts and some of the news that drove some of these stocks, because some of them were kind of surprising today, right? And you look right now, where's some of this money coming from to drive the markets up? Foreign investors, right? They take the years buying to fresh highs. You can see over to the right there. They've been buying it up like crazy, which is not a surprise. I mean, where else are they going to put their money, right? And so we'll see if they start fleeing somewhere else. But right now, yeah, you can see it's been going up coming into July. And so that's not a surprise. And, you just look real quick at the indexes, right? What we talk about, the 21-day moving average, sitting right on top of it. That's where we bounced on the SPY today. The Qs are different. We're actually below the 21 moving average. It bounced off that 373 area of support. And then, of course, the IWM, again, it can't get above that trend line. It's heading towards the 21 EMA. If it does drop below that, you can guarantee you're going to see a much more big sell-off before it comes up and tries to retest, as I showed you yesterday. If you didn't watch that video, I'll put it at the end. Now, PayPal got crushed after earnings. Huge drop right here. I think it was like 8% down for the day. It caught some support around that 64.40 area, and that's where it held for the day. We'll see if it continues down after that, because you see the hourly, way oversold right there. So I'll be surprised if you get a short-term bounce on this one. Again, moving back up through that volume gap. We'll see if that happens. Got to have some buyers roll in on this one. AMD is the opposite. Even though it didn't report earnings, it reported the other day. Huge move up, right? So a nice 4 or 5% move up when a lot of other stocks were red, move right through that volume gap. Again, let's see if we can get above that trend line right there, or even hold this area, and we'll have to see. But of course, what drove it was this news right here. They came out, and again, they said AI 62 times on their call. This right here has to do with AI, this chip right here. And so we'll see if, these graphic cards they're trying to put out, these new graphic cards, which are supposed to be more fairly priced, ends up, giving them more business and stuff, because remember, their revenue actually dropped year over year. Now, Tesla, this one right here was heading for the gutter and pre-market, and all of a sudden, bam, oh, look at that right there, popped. And so I marked this 251.20 area. Keep an eye on that one, because it's popped twice now in the last 2 days on that support level. And again, when we look at this, when we pull out, you can see it's still just in this range, right? That I'll say 251 now. Upwards of 268, which is very key. So it's still just kind of stuck here. Wanting to figure out what it's going to do if it moves up tomorrow. Look at that 268 is definitely going to be some resistance now. But, we'll see what happens on this one. Hadn't seen any call sweeps flying through. One thing I was surprised that it popped on, which don't make a whole lot of sense, is Tesla's China's July sales declined 31% compared to June. Now, month over month is kind of stupid to compare, but when you look at the chart here, you'll see what I'm talking about. And I don't think it's anything to do with Tesla more than it does China, which I'll show you in just a second. But you can see right there, I mean, that's the month, right? So obviously, it's the least amount of sales they've had this year. If you look at that, looking at this chart, don't seem like Q3, the first month's a problem or not. But, we'll have to see. Again, quarter over quarter is the best way to compare this and stuff, because year over year is actually up. And so just keep that in mind. Again, I don't think it's so much of a Tesla issue as it is a China issue, which you'll see in just a second, because speaking of China, Chinese stocks rebounded today, right? Actually, because yesterday they got crushed. So they're basically just trying to gain back what they lost yesterday. Not quite as much, but and you see BABA right here, still got some ground to make up. But again, it can move through this volume gap very quickly to get back to 100. So just keep an eye on that one as well. Again, they report earnings. It's going to be, I think it's next week, if I'm not mistaken. And so keep that in mind. And when you look right here, when I talk about China and their economy and it being hot garbage, you can see what they're doing here, right? How stimulus, just like in America, means a lot. And this is the Bank of China. You can see how they've been trying to stimulate the economy. It's moving up. GDP is starting to try to make a turn. If you look at this chart and examine it, a lot of times they go hand in hand. Sometimes they don't. But again, liquidity is king. That's what everybody cares about right now. And we'll see on the earnings like how bad things really are. And I ran across a stat today on the travel from outside coming into China. And if it's even halfway true, because I always say the truth usually lies somewhere in the middle. This says nationwide, just 52,000 people arrived to mainland China from overseas on trips organized by travel agencies during the first quarter, the latest period for which national data is available, compared to 3.7 million in the first quarter of 2019. Now, either this means that people just aren't using travel agents anymore, that they made it really tough to get into China, maybe get the visas or whatever you need to go there and stuff. Maybe that's the case. But even so, in 4 years to go from 3.7 million to 52,000, I mean, that's a lot of cheddar that's not being spent in your country, okay? Which obviously you see, that's why you see their GDP struggling and everything else. But again, if you travel over there, if you live over there, I know some people put in the comments, I misunderstood it is. Maybe that's what the case. But again, we have to go off the information we have here. But, let us know if you know anything about that, because I'm like, wow, now this, again, I want to reiterate, this isn't people that just travel into China. This is people that use travel agencies. I personally don't use a travel agency, but obviously a lot of people did in 2019. and all of a sudden they're not using them anymore. So, again, that can make sense, and why their economy looks like hot garbage right now. That could be, leading to it. Now, as far as earnings tomorrow, it's high beta garbage reporting tomorrow. Okay, you got Fubo, Nikola, Fisker. Okay, these right here, I can guarantee people are playing heavily in the options and stuff on this, and a lot of them be short squeezed if they do even report even a decent earnings. Okay, just keep that in mind. Now, economy-wise, we're going to have a lot of economic data all about us. Okay, it's going to be all about the payrolls and everything, non-farm payrolls, participation rate, and there's the almighty unemployment rate. Did it finally go up? It's projected to actually stay the same at 3.6. And so let me know your guess tomorrow what you think. I'll say it'll go to 3.7 just for the heck of it. Maybe we finally get a spike. We've seen ADP obviously over what it needed to be. You've seen the job market stay steady and hardcore, and it's just because there's a shortage of people. That's just the way it is. Okay, that's been leading up to for a few years since 2018. As I showed you, those who are new to the channel, you totally missed it. But again, when you got your birth rate going down, retirements going up, immigration going down, guess what? You're going to have a shortage of labor around this country, okay? And so that's what's still happening right now. But we'll see. And that's why the Fed is having a huge problem trying to get unemployment up, right? Because if they get unemployment up, they can get wages down as well. Because the less hard, or however, the easier it is to find somebody to come work for you, the less you have to pay them. Okay, so that's kind of what the deal with that is and stuff. So just FYI, and always keep in mind, as I was talking to my brother-in-law, I was talking to other gym I told you about, when you're a small businessman, it's hard to pay 15 to 20 bucks an hour for people when you're actually used to paying 8 to 10. That's a big jump for a small business. An Apple, who has 165.5 billion in cash on hand, they don't even notice it. Okay, and they actually enjoy seeing this right now because, again, the more you drive small businesses out of the word works and out of the economy, just more competition or more customers flow to the big boys. Okay, so that's kind of how this is working and stuff. Now, I'm not saying people don't deserve 15 to 20. You don't deserve 15 to 20 to flip a burger. I'm sorry. I'll have that debate with you any day of the week. I've done the work. I ain't having it. Okay, I used to be a restaurant manager too as an adult. So no, that makes no sense. Skilled labor, have no problem. You making your money. But if I can, I'm just gonna stop that conversation because I'll say something I regret. But no, can't pay you that. That's ridiculous. If a teenager can do it, you ain't getting 15 to 20. Not happening. So that's just my opinion. But again, you got to keep that in mind as well. So, and what's the heart blood? Hopefully it stays that way of America. 56% of companies that have 500 people or less, smaller companies, family-owned businesses, this kind of thing. That's what you want to think about when you're thinking about that kind of stuff. So, but we'll see tomorrow. Obviously, we'll see how Apple opens up, see how Amazon opens up. You see this where they'll run up real hard in after hours and then kind of cool off in pre-market. Tomorrow is Friday, so you got weekly options expiration as well. And so we'll have to see, if Amazon can lift all boats, right? Or if Apple, remember, because it's so heavily weighted, kind of weighs things down. We'll have to see. So anyway, hope you guys got something out of it, guys. If you did, please hit that like and subscribe button. I appreciate all you guys that have been watching, all your feedback. I always look at the comments and stuff. And if I don't comment back to you, a lot of times I'll put a heart or a thumbs. It's just because I got a lot going on. That's just the way it is. So again, I'm a one-man show. So hope you guys got something out of it. I'll see you tomorrow, okay?